Hello, fellow traders. Tis I, TheRumpledOne, coming to you on Tuesday, June the 4th. The year's 2024. Let's talk trading. Process versus outcome. These videos are for educational purposes only. Your results may differ from mine. And just a reminder here, risk management. Never lose more than you're willing to lose on any one single trade. Just not smart. Okay, today's topic, process versus outcome. I am sure you've heard about this. Focus on the process, trust the process. Don't worry about the outcome. There's a lot of truth to that. And since we're human, it's hard to do. We make it hard because of our thoughts, our beliefs, our emotions. What makes it so difficult? Well, the first thing is, if you're trading, you're trading with money, and there's a lot of emotion wrapped around money. And if you do something, if you enter a trade, you enter the trade with the expectation that you're going to win. And the thing is, believe it or not, we forget that sometimes, most likely, we're going to lose. And sometimes we might have an expectation of making more money or more pips or more points than what the market's willing to let us take at the time. So, for example, here, right now, if you had taken a long at the edge of the rat zone, you'd be up about 10 pips. Now, the question is that good enough? And so, if you have if you focus on the process, it might be telling you, no, you should stay in this trade right now. And if you focus on the outcome, then what will happen is if you were to sell right now and price go up, you'd be kicking yourself. So then the next time you get in the same situation, you go, oh, last time I sold it, went up, so I'm going to hold on. Well, of course, this time it goes down, and now you're double mad. You're mad the first time because it went up, and then you're mad the second time because it went down. You probably might even go on tilt, especially if it happened, in the same day, back to back. And now your head is just not in the right space for trading. Not at all. So what do? Well, if you have a process, preferably it's written down, and you follow it, then you wait for your exit signal. And then you exit when you get your exit signal. And so you enter when you get your entry signal, you exit when you get your exit signal. It's back to my old, trained monkey talk, where when you're trading, you're not supposed to be thinking. All the thought process should be done pre-trade. Part of your either pre-trade routine or just the thought process is already built into your method. So, if you're trading a rat zone, you look for an entry signal somewhere in the rat zone. It could be anything from like higher high, higher low. It could be a flip-flop box. It could be a rat reversal, which actually, if I think about it, a rat reversal almost is a flip-flop trade. It's just flip-flops can occur anywhere, and rat reversals occur in the rat zone. It could be crossing the previous close, breaking the previous high. It could be the trigger. Doesn't matter in here so much. It's just you're trading in this zone, looking for it to come out, maybe even go back to the other side where the red rats would be feasting. But you're just focused on the process. You're not thinking about how many pips. You're not thinking about anything other than doing what you're supposed to do when you're supposed to do it. And you could be trading the psychological lines here. We're coming up to the 75. Let's see, we're right here. So what are we going to do? Are we going to go long? Or are we going to go short? Or are we not going to do anything? Well, what does your method tell you to do? So you follow the method. You don't ask questions. You just follow the method. Because the questions have already been answered. It says if this occurs, then I do this. That's the process. But if you think, then you're focused on the outcome. And that's the easiest way to tell. Are you executing the process or are you thinking about the outcome? Because if you trust your process, you don't have any reason to think. So if you're thinking, maybe you don't trust the process. And the question is, why don't you trust the process? That's the deep question. So where are you in that? Are you truly a process trader, trading the process, or are you thinking about the outcome and you're questioning your process? Which one are you? Let me know. I'd be curious to see what you traders have to say. Okay, let's take a quick look here and see what the charts are telling us. Whoops. Okay, looking at the monthly, so far we're in the upper wick zone of the previous month. So look for it to break out one way or the other. All the gaps have filled for the week. We're in the upper wick zone of the previous week. We've already broken out to the upside. Now, kind of kicking myself. I think I told traders yesterday, I think the yen was around 157 to look for a short. It's at 154. I missed out on that one. Can't be everywhere at once. I was trading the pound yesterday, and after the video, or actually was it or before the video, I can't remember, but I should have, looks like I shoulda, coulda, woulda made some money off of that pound trade. And as you can see here, we dropped below the 75, and here we are. We broke out of the opening range for the year yesterday, and looks like Friday we broke, but we came back in, and then here today we've dipped back in, but we're above it again. So it looks like that 2760 number, price is wanting to go above it. And for the year, we're 62 pips above the open, 61 now. And we've broken out of that inside bar once again for the month from 5 months ago. Wow. Look at the yen pairs. I wonder what happened with the Bank of Japan. Something happened. Looks like something big happened. Now I'm curious here. That is huge. It's really huge. So I hope somebody out there heard me say, look for a yen short, and took advantage of that. Those type of trades are almost like, you talk about making your day, week, month, or year. Once again, just follow the process. And you can see here we're back at that 27.75 level. And, you know, I just thought something else about the process. A lot of times we kick ourselves, like I said, you know, the old hairy hindsight. And see, that too can mess with you because when you do something, in other words, you enter the trade and then you don't follow the process, you'll get one set of thought patterns. But if you don't enter the trade and then you look back and had you entered it, now you're going to have another set of thoughts that are going to mess with your head. And that's real easy. That's real easy for you to do. So, once again, if you don't enter a trade because you're thinking, then once again, you're thinking about the outcome. You're not focused on the process. So all you have to do is just, you know, you can make a note or make an observation of what you're doing in the moment. So are you focused on pulling the trigger when the trigger appears? You know, clicking the mouse, entering the trade, or are you thinking, oh, I don't know, it might not go up, or oh, it might go down. That's what you have to focus on, is whether or not you're sticking with your plan, sticking with your process. Guess what, fellow traders? The fastest 15 minutes in trading is just about over here. So I hope you can use that analysis of process versus outcome. And I hope that helps you in your trading. And once again, thanks for watching and listening. And when you're trading, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.